Good afternoon, everyone. Thank you for coming today. As always, I would like to extend my appreciation to everyone here, including our moderators, for their ongoing support. We will continue to study about the consolidation pattern, but first, let's go review what we've learned 2 weeks ago. 2 weeks ago, we went over the horizontal channel, the ascending triangle, the bullish pennant, and the ascending channel. And today we will discuss more of the consolidation pattern, which consists of the descending channel, the inverse head and shoulder, and the head and shoulder. First, let's review. We have the horizontal channel. This consolidation is trading in range. This is more of a neutral signal where the price oscillates between the resistance and the support, which keeping the trade within the defined range. As you can see, when the price hits the resistance, it goes back to the support, and usually a breakout happens when the price it stays outside the channel. A breakout is when the price or candlesticks break through the resistance, so that means it's showing a possible reversal to the upside. However, if it breaks below the support, then it means it gives us a clearer picture that we might be heading to the downside. And then we have this ascending channel, which always serves as a bearish signal. On ascending channels, usually it could move up between the two parallel lines. So the lower line supports the price and the upper lines act as a resistance. So this means that the price generally continue to go up within these lines. Although the ascending channel, we all know it signal a bearish reversal, just keep in mind that this consider a bullish because the price continues steadily moving upwards, and it continued to create a higher high and a higher low and a higher high, higher low within the parallel lines. Then we have the descending channel. So the descending channel could actually occur either on the top or the bottom trend. So this pattern can form by the two parallel and a downward sloping lines that represents the series of lower highs and lower lows inside the channel. This is the example of the descending channel, which shows a downward trend with the two parallel lines forming a channel. This actually connects lower highs and lower lows, lower highs, lower lows. The upper line serves as resistance and the lower line serves as a support. Usually the traders will watch for a price breakouts between the resistant line. When it breaks out, it will serve as an entry signal for the traders. So usually you could either see a momentum candle instead of entering and waiting for this confirmation. You could actually check your lower time frame to see what kind of candle is this. Is this really giving us a breakout of the channel or not? So after a breakout, the price might retest the support line or the support or the channel. It could actually sometimes give us a good entry for those who likes pullback or who missed the first entry. This is an example of the descending channel. We have the two parallel lines, the resistance and the support, and this pattern retested the channel or the support, and then there's a possibility that we are heading for a bigger move up. Let me just repeat this one more time. Support line, resistant line, a pole, a breakout candle, resistance on top, a support line again, and then a possible move up to the upside. We have this famous head and shoulder that we are going to go over. This is a bearish signal. So we have this actually indicates a declines in the buyer's momentum. So this pattern emerges when the price fails to create a new higher high and forming a lower high instead. The lower high actually is the second shoulder, which will be confirmed when the second neck is confirmed. It consists of the three peaks. We have the higher peak, which is the head, and between the two lower peaks are the shoulders, indicating a potential bearish reversal. Let's go see the chart. So we have these two examples of the head and shoulder. We have the smaller one, which is the narrow head and shoulder, and we get the wider head and shoulder. And as you can see, we could draw a support line between that, and a breakout is a confirmation of the pattern, that the pattern is indeed confirmed. Let's go see if we could see a short video. Okay. On this example, we have the head. We have the first shoulder. We got the head and the second shoulder. And then we could draw a line graph. As you can see, it gives us a perfect picture of the head and shoulder using a line graph. And let's draw a neckline on the bottom of this head and shoulder. This is your neckline here. And this momentum candle, this bearish candle, it serves as that, this candle serves as that the pattern is actually confirmed that we are heading to the downside. Always look at the shorter time frame to confirm the pattern. And then on the right side, we still have the wider head and shoulder. Let me just check this. We have the first shoulder, your neck, your head, your neck, your second shoulder, and your neckline. Let's narrow this down. And as you can see, this just literally confirmed the downside. Let's draw our neckline in here. Remember, a breakout will serve as a confirmation of the pattern. It means that the pattern is indeed confirmed. So this momentum candle to the downside is your confirmation, and it's your entry point. You could enter here using a shorter time frame. As you can see, just continue to go down. Okay, that is your head and shoulder. Remember, just don't forget to use your line graph just to confirm the pattern. Sometimes we do prematurely thinking like that is a head and shoulder indeed, but if there's no breakout, there is no pattern, there is no reversal. It could just give you a fake out. This must be a possible example of imperfect head and shoulder. We have the first head, and then we got the two shoulder. Let's draw a neckline, slanted neckline, and as you can see, a breakout of this. Another line graph just to show you the pattern. A breakout of the neckline will serve as a confirmation to the downside. You enter on this candle. You could use a shorter time frame. How to exit this trade? You could either exit momentum trade. You could exit on this support line with your first candle, or you could push this down to the second candle. It gives you a better exit, more profit indeed. And as you can see, it's just literally stop on the support line. It's just waiting now. So always use a line graph to see some patterns. It will actually help us identify the pattern better. And sometimes the pattern will not give us a picture perfect head and shoulder because the market is noisy. So it could be a slanted head and shoulder. We could actually sometimes see a two heads for a head and shoulder. Same thing with the inverse head and shoulder. We could actually see two heads, and it cannot be perfect. So we always have to practice with, we have to be able to identify these patterns right away so that it will help us trade better. Okay, again, we have this perfect head and shoulder. We have the first shoulder, we have the head, and we have the second shoulder. So let's see if this is a confirmation to the downside. Remember, I've been telling you guys we have to draw the neckline, which serves as a support, and a breakout of that neckline will serve as a confirmation of the pattern. Let's see if this one will give us a breakout or it will give us a confirmation to the downside. Okay, let's draw our neckline in here. This is actually a good line of support because it was retested as a resistance before, and it's been serving as a support for the head and shoulder. Now let's scroll this to the right, and as you can see, there is no breakout. It just gives us a fake out, not even a fake out, just did not respond to the pattern itself. It although we have a completed head and shoulder as been identified using a line graph, a line. There is no breakout to the downside. There is no breakout from the neckline. There is no breakout on the support line. So this just gives us a head and shoulder, but there's no confirmation that it is going to the downside. It actually goes back up and retest the support line. Okay, now we have a head and shoulder. This is a bullish signal to the upside. An inverse head and shoulders pattern creates a higher highs and a higher lows, forming a distinctive pattern that signals a potential reversal from a downtrend to an uptrend. It consists of three peaks, a lower peak, which is the head, and the two higher peaks are the shoulders, indicating a potential bullish. Let's go see if we could be able to see an example. There you go. We do have an inverse head and shoulder in this example. This is similar to a head and shoulder, but it's just the opposite. So we have the first shoulder, which is this example of an inverse head and shoulder is actually called imperfect head and shoulder, just because we don't have a picture of perfect inverse head and shoulder. Our first shoulder is actually higher than our second shoulder, but the neck will remain the lowest one. Then the head is the lowest in the middle, and the right shoulder is slightly higher than the head. It has to be, otherwise it's not an inverse head and shoulder. Remember, just like we said earlier on the head and shoulder, a breakout will complete the pattern which you will enter long. Enter this in the shorter time frame. And then a stop loss is always, some people have risk tolerance very short, or if you have a higher risk tolerance, you could actually get out at the second shoulder. Some people actually exit on this bullish momentum in case it gives us a breakout or a fake out, I'm sorry. So in this video, short video, we have the inverse head and shoulder using a line graph. You could definitely see it perfectly. And you have the first shoulder, and you get the head, and you get the second shoulder. And in this case, what I do on this particular trade is we could enter prematurely or aggressively by drawing a trend line slanted, where we could actually possibly enter on the second shoulder instead of waiting for the confirmation of the completion of the inverse head and shoulder. So aggressive traders will actually draw a trend line just like I did in here. And then a confirmation for this is when one candle traded above the trend line, you enter, and then your possible exit is once the completion of your second shoulder, and you draw a trend, a support line, which is your neckline. You could either exit in there, or wait if you would like to continue in the trade. So for this example, we had that trend line slanted, and we also have the neckline, which some people will enter on this candle, this momentum candle. If you did miss entering with this momentum candle after a breakout, you could always wait for a pullback. this is your second chance of entering this trade on the pullback. Majority of times it will, not majority, but if it does give you a possibility of pullback, try to enter on the pullback if you missed the first entry. Usually a pullback, um, it may not test the neckline. It could sometimes break down the neckline and it gives you as a fake out. But as long as it is not below the second shoulder, the pattern is still valid. So this pullback will serve as a bigger move. This is your first entry, and the second entry is the momentum when a breakout above the neckline. This is another example of inverse head and shoulder. This is actually a picture perfect. However, as I said earlier, we have to draw a neckline after the completion of the inverse head and shoulder. If you don't see a breakout of the neckline, there is no trade to the upside. On this particular trade, it actually just gave us the inverse head and shoulder, but yeah, it did not give us a breakout. This this actually continued to the downside. You get the neckline in here, and there's no breakout. Picture perfect using a line graph. Remember, just like any other pattern, an inverse head and shoulder can appear completed, but it isn't confirmed without any breakout. So we can draw a trend line to enter early, just like I said earlier, or just wait for a confirmation to the upside, or wait for the confirmation after a breakout of the trend. It's always important to set a stop loss at the neckline in case the price reverses, just like in this chart. Remember, when trading these patterns, it's important to remember that no pattern is perfect. We must train ourselves to identify these patterns, accepting that they can be flawed due to market noise. Additionally, it's helpful to occasionally adjust the chart's time frame to gain a clearer view of the pattern. So if you would like to enter early, always look at the shorter time frame instead. Don't forget to utilize the line graphs to confirm the pattern, as candlesticks can sometimes obscure details, especially with the patterns like head and shoulders or inverse head and shoulder. Thank you guys for listening to me today, and let's go ahead and share our screen. And if you have any questions, please let me know. Thank you for coming.